Hi everyone, today is January 25th. It's the last round of the simulation is due tonight. Now in the simulation, if we look at net profits per team, we started out with most teams around the $50 million in net profits, and now plenty of teams have earned over $200 million of net profits. And we have Burke and Glickstein Cars is the number 1 and 2 position. We have ABZ Cars and Blue Chip Autos all doing very well. And we have also Zoom Cars all over $200 million in their profits. So that is, a lot of companies are getting it. They're making their profits. They're moving up. If we look at points per team, we have a lot of teams coming in close to 400, 500 points per round. So the first round was easy to do pretty well because you're coming off a bad management group and you're able to really turn things around. And then as you move forward, you're trying to just maintain 400 or 500 points. If you have a really poor round, like Rose Autos had a weak round in year 4, but they bounced back in year 5, it's possible to bounce back strong. It's sort of like coming from a C average to an A average from one semester to the next. You can really turn things around in one round. So even if you're behind, I have seen teams who were behind in round 5 come back strong with 1,000 points or more in year 6. So everybody wants to really put the effort in this last year to get the full points of this project. Remember, you need 2,600 cumulative points to get the full score for this project. So if we look at the stock price per team, we have CML is at the top of our stock price list with $146, really amazing stock price. We have Zoom Cars with $123. So any company that has these are all these companies that are over $100 per share of stock price, that's amazing. That's really performing at a very high level. How do you get a high stock price? You have high earnings per share. And how do you get high earnings per share? You have high net profits and you have a low amount of outstanding shares, helps propel your stock price per your team. If you look at sales per share, we have a couple companies. Look at this company, Rose Autos, had a big increase in their stock price, and you saw that reflected in their points. It also had a big increase in profits. Our number 1 team in sales per share are Yao Wang, Zoom Vroom Motors, and Glickstein Cars. Hanley, these are all close to $1 billion in sales. Fantastic job. So this is really the pack of people from $755 million in sales exactly to close to $974 million. This is the top pack of the class in sales, which is great. So anybody down here should really look to these top teams to see what are they doing in the industry page to get these top sales, because these sales are translating into earnings. So number 1 earnings per share is CML, followed by ELY, and then Zoom Cars. These are the top 3 earnings per share. They have high net profits. They have a lower amount of outstanding shares, and they're leading the pack in profits. We have only one company that really declined in net profits, so that's bad. Why negative net profits here? This is a company that's got to really start working on the simulation. They may have just been pushed forward due to lack of input on the game. So you want to really work hard to increase these earnings per share in the last round. And if you're watching my weekly video series where I go over suggestions on how to improve every round, every year I spell out, you got to improve those profit margins, you got to improve those sales, forecasting. So if we look at the leaderboard here, these are the teams with the top points of the round, current round points. Now gross profit margin, we have top gross profit margins for round 5, 65%. By this point, you should have over 50% profit margins, and most teams do. If you're below 50% profit margins, you're not running your company very well. You're not increasing profits as fast as you should. Profit margins should be above 50%, and by the last round, most teams should try to have above 60% gross profit margins. You started at 40%, so for these companies down here, that are like say 42 to 24% profit margins, you're not really improving much, or you're driving your company's profit margins backwards. And that's something investors do not appreciate, especially in a market where revenues and profits are growing so quickly. So stock price, top teams are over $100 in stock price. Lower end teams are under $50 in stock price. And the difference here is really the amount of earnings and the amount of earnings per share. So there's a big, almost like a bell curve here of stock performance between teams. Okay, so total points. So we have 2 teams already earned enough points to get the full score by round 5. And we have a number of teams here over 2,400 points that just have to earn 200 points in the last round to get the full score. And then certainly any team which most teams are above 2,000 points, still very easy to get that last couple hundred points to push you into the full A score, 100% performance for the simulation. And if you're below 2,000 points, you can still dig deep and earn. I've seen teams come back earning 1,000 points in the last round and really push them to the full score of the simulation. Now, how to really have a rebound in your points if you're doing poorly. Watch all my videos, see what I've been doing and talking about, read the student user guide, play the practice rounds to get that expertise to really push your performance up. Operating profit margins are really managing your advertising expenses, not over advertising, but advertising the perfect amount to get as many sales as possible, profitable sales. Because if you over advertise, you'll get a lot of sales or a lot of sales demand, but you're eating through all your profits. So you don't want to, if you're making $5,000 of profits in a car, you don't want to advertise $6,000 per car. Now you're taking a $1,000 loss because you're advertising too much. So monitoring your advertising cost per car, it will really help to maintain or grow your operating profit margins. Earnings per share, of course, this is a function of your earnings, but it's also about your outstanding shares. So buying back stock will help reduce your outstanding shares and push up your earnings per share. And return on equity, your last round, return on assets, I should say, ROA. The ROA is the return on your assets, and also the total asset turnover, which is down here, is how much can you really get your assets produced in this last year. So in the last year, you bought a lot of assets every year moving forward. So this last year, the sales you want to generate as many sales as possible to really get the return from those assets you invested in. And that should help the scores of those go up as well. And your revenues should go up a lot in the last round, because remember, every round you get these double-digit percentage growth in your revenues. So if your revenues are at a high base and they go up 25%, you're going to sell the most cars ever in the last round of the simulation. Okay. And these net profit margins, you want to, if you buy back your debt, you pay down your debt, you'll reduce your interest, which will help your net profit margins. And we have some companies here with the 99, 98 percentile level of net profit margins, means you beat 99% of the past 5,000 teams that played the simulation. Just a fantastic showing of strength for our Stony Brook teams here. And this is wonderful. So this is just a quick little wrap up of how your teams have performed in the simulation, and most teams have exceeded my expectations, and you still have one round left to get those points you need to get the full score for this simulation. So I wish you the best of luck in the last round. This will be the last video in my video series wrapping up the simulation, and you can see how the simulation, this finance class is about learning on how financial managers can interpret and do financial analysis to maximize shareholders' wealth. And that's what financial managers are supposed to be doing, is maximizing shareholders' wealth. So as you play the simulation, you're supposed to be maximizing shareholders' wealth to earn your points and earn your scores in the simulation by, reducing costs, increasing prices, increasing profit margins, increasing sales. Everything you're doing in the simulation is to maximize your earnings and maximize shareholders' wealth, and that's how you earn points, and that's how it ties to the class. Okay, I wish you the best of luck in this last round and finishing out the course. It's been a wonderful winter semester that's gone by pretty quickly, and I hope that you've learned a great deal in this class, And I hope that you've enjoyed your experiences with this class. And I wish you the best of luck, and I'll see you soon in the future. Take care.